Hello everyone. So today I am explaining a question from Wiley textbook. So let me first share my screen. Yeah. So here is the question. It is E13.24 in the Wiley textbook. So it says, as sales manager, Katsa Kaiser was given the following static budget report for selling expense in the clothing department of Dunham Company for the month of October. So the question has given us the static report, and as a result of this budget report, Katsa was called into the president's office and congratulated on her fine sales performance. She was reprehended, however, for allowing her cost to get out of control. Katsa knew something was wrong with the performance report that she had been given. However, she was not sure what to do and has come to you for the advice. So let's do it. So what we have to calculate? First, we have to prepare a budget report based on flexible budget data to help Katsa. And should Katsa have been reprehended? So we will find it out soon. So let's first of all see what is the static report. So in the static report, we have given the budgeted figures, the actual figures, and the difference. So the difference F refers to the favorable differences and U refers to the unfavorable differences. So let's see. So let's first look at the given static budget report for the month of October 2022. The report compares the budgeted amounts with the actual amount for various expenses categories. The budget sales, which were expected to be 8,000, but it turned out to be 10,000 in actual, resulting in variable variance by 2,000. So the budget sales were expected to be 8,000, but it actually turned out to be 10,000. So the several cost item exceeds the budgeted amount, including sales commission, then the advertising expenses, travel expenses, and free samples given out. So these are the variable cost. So we will find it out what are these expenses in a bit. So several cost item exceeds the budgeted amount, including sales commission, advertising, as I have already told you, leading to unfavorable variance. As we can see here U, which shows unfavorable variance. So the difference is, like earlier the sales commission was 2,000, now the actual is 2,700. So it shows unfavorable difference, which is 700. Same in the case in the advertising expenses, travel expenses. So these all three were showing unfavorable differences. So despite all these, Katsa managed to keep the total cost $900 below the budgeted amount. So here is this $900, which is showing unfavorable differences. So let's move further and know and see what a flexible budget report provides into consideration. First of all, what is a flexible budget? Flexible budget takes into account the actual level of activity and adjusts the budget amount accordingly. So here is the flexible budget report for the clothing department. So basically in the flexible budget, budgeted amount, we adjusted the flexible amounts for variable cost based on the actual level of sales unit. So we can see that the variable cost of differences has reduced. So let me tell you, like, these are the sales in unit, variable cost, sales commissions, advertising expense, travel expense, all the figures are given here. So although the sales commission, let's go one by one. Although the sales commission, like which was earlier 2,500, now it is 2,700. So it has been increased by 200, which is like referring to the unfavorable difference. So advertising expense, the second one, traveling expense, and free samples. These all three expenses, these all three costs were effectively controlled by the CATSA, as all these figures has been reduced. Like earlier it was 1000, so now it is 900. Earlier it was 3000, now it is 2600, and earlier it was 2000, now it is 1500. So although sales commissions has increased, but apart from that, all the three left expenses, so these all were become smaller. So it shows that CATSA managed to control these costs more effectively that initially perceived. So what are these expenses? Let's discuss one by one. So let's find out what are variable cost first and what are fixed cost. So variable cost are something which has direct link with the sales volume. Like if the sales volume increase, the variable cost also increase, and if the sales volume decrease, so the variable cost also decrease. So it is directly related to the sales volume. So it is not fixed. Like in the fixed cost, it doesn't matter like the sales is fixed or not. So the fixed cost has to be incurred, like rent, office salaries. So it has no connection with the sales. So this is the main difference about in between variable cost and fixed cost. So let's find out what are sales commission one by one. So sales commission is the commission or monetary incentive which is paid to the sales representative by the sales generated by them. So if a sales representative generates sales, so it gives so we have to give the commission to the sales representative. So this refers to the sales commission. Advertising expense is similar to the sales commission. Advertising expense refers to the amount of money given to the advertising agencies for running the advertising campaigns. Travel expense is incurred by the businesses to, like if I am going or if any employee is going on business tour or traveling tour, so all the expenses like accommodation, flight tickets, so everything what we need to do while traveling for a business trip, it is known as traveling expense. So here the next is free samples. Free samples is something like giving free products to the employees or to give the for the promotion of the product without any charge. So it is known as free samples. Now let's talk about rent under fixed cost. Rent refers to if we acquire a kind of physical space for doing business, so we have to pay rent. So rent is something which comes under fixed cost. No matter whatever sale is, we have to pay the rent. Next is sales salaries and office salaries. Again, as rent, I have already told you what fixed cost is. So no matter what sales is, salaries, rents, everything is fixed. We have to pay it. If our sales are decreasing, we are we are gaining the losses and all, but we have to pay the salaries, we have to pay the rent. So these comes under the fixed cost. Depreciation also comes under the fixed cost, as whatever machines we used in a production, in a manufacturing unit. So with time, the depreciation, the value of the machine decreases. So there is a percentage, there is a time period for depreciation. So it also have to pay. So it also comes under fixed cost. So all these things we just calculated in while doing this flexible budget report. Now let me tell you how I get these figures like 2500, 1000, 3000 and 2000. So here is my workings. Calculation of the flexible budget variable amount. So sales commission, how I got my sales commission. There is a formula, actual sales upon budgeted sales value into budgeted amount. So what is my actual sale? Actual sale is 10,000. Yeah, here budgeted sale is 8,000. and I multiply the amount into budgeted amount. So the budgeted amount is given in the question, which is this 2000. Yeah, sales commission is 2000. So here 10,000 divided by 8,000 into 20,000. So I get 2,500, which is flexible budget variable amount. Similar to the sales commission, I get advertising expenses, travel expenses, and free sample given figures using this formula. So now just come to the last part, why if Katsa should have been reprehended or not. So while doing it in my review, Katsa should not have been reprehended. Why Katsa should not have been reprehended? So let's find out. So while doing this whole concept, the static report as it was earlier is shown is 900 favorable amount. Here, the total cost is 900, which is unfavorable. So it converted into 800, which is favorable. So Katsa was managed to do all these things. So the budget report provided to Katsa was based on a static budget, which did not consider the actual level of sales unit. So by preparing a flexible budget report, we can see that Katsa successfully managed to control cost and keep them below the budgeted amount. Therefore, the reprimand she received was unwarranted in my view. Her efforts should be recognized and she should be congratulated for her fine sales performance and cost management skills. So this is all from my side. As I have already written this, like Katsa has been able to keep budgeted cost below actual cost and has done a good job. And Katsa has managed to keep budgeted cost below budgeted cost below actual cost by 800, which is favorable. So this is the reason why Katsa should not have been reprehended. So this is all from my side. I hope you all have understood these questions. But still, if you further have any query, any doubt regarding any point on this question, you can comment me under my link once I upload it. So thank you everyone. And yes, this is all from my side. Okay, bye.